Welcome, good morning, good afternoon, depending on where you are, and welcome to this panel discussion entitled Digitalization in the New Normal, Taking the Next Step. My name is Emmanuelle Ganne. I'm Senior Analyst at the World Trade Organization, where I lead work on micro, small, and medium-sized enterprises and digital technologies, in particular blockchain. Now, the year 2020 has no doubt been unlike any other. The COVID-19 pandemic has shaken the world. It has exposed supply chain inefficiencies and brought to the fore the urgent need to digitalize paper-based processes. MENA governments and businesses have been taking proactive measures in this respect. And this session will provide an update on latest developments and will discuss the importance of providing a conducive regulatory framework for trade digitalization to reduce bottlenecks and support the development of a new business landscape. So we have a fantastic panel of experts with us today to discuss these issues, and let me introduce them. So we first have Yusuf Ali Khan, who heads Citi's trade business for Middle East, North Africa, Pakistan, and Turkey, and who is based in Dubai. In this role, he's responsible for driving and providing strategic direction for the trade strategy to Citi's corporate, financial institution, and public sector clients across trade services, trade finance, export finance, and commodity trade finance. We also have Asli Karapinar, who is the head of treasury at Schneider Electric for Middle East and Africa. She's based in Dubai, where she oversees treasury activities and banking relationships, including cash, foreign exchange, and trade finance activities. We then have Sumit Roy, who is an expert in trade finance and international payments. He is co-founder and chief marketing officer of FinTech Innovations International, the company that has launched the e-marketplace for banks called TradeAssets. And I understand that this company was launched 3 years ago at GT MENA, so happy anniversary, Sumit.
Thank you, Emmanuelle.
We then have Summer Younes, who currently leads the ecosystem partnerships and trade finance vertical of the delivery management practice with the Abu Dhabi Commercial Bank. He's primarily responsible for driving and delivering the department strategy and advising the leadership team on industry best practices. And he works closely with industry experts to develop new digital product solutions. And we then have Huny Garg, who is the country head for the Kingdom of Saudi Arabia and Bahrain at SWIFT. Huny has over 22 years of professional experience working for organizations like SWIFT, Standard Chartered, ABN AMRO, ICC Bank, and HDFC Bank in transaction banking, corporate, commercial banking roles across the Middle East, North Africa, and South Asia. Now, before I turn to our speakers, let me remind you that you can ask questions via the Q&A function. And to keep the discussion as fluid and as lively as possible, I will take questions as they come. So don't wait until the end of this discussion to post your questions. Now, without further ado, let me turn to our panelists to ask them the first question, which is a question for you all. Now, trade and trade finance in particular, as we all know, continue to rely heavily on paper, which proved to be a real challenge during the current pandemic. Now, the current pandemic has accelerated digitalization efforts. So could you tell us about digitalization initiatives taken during the pandemic and the most significant developments towards digitalization that you see happening? And I first would like to turn to Asli. Ladies first. Asli.
Thank you, Emmanuelle. Hi, everyone. It's a pleasure to be here at a esteemed GTR MENA event again, albeit in a different format this year, virtually. So last year was a breakthrough in many ways, professionally in, I think, everybody's career. And yes, we need to speed up the way the things we do actually manually to do it more digitally, and we were actually maybe forced to do it a bit faster last year. As you rightly mentioned, Emmanuelle, we do a lot of things in trade finance still on paperwork, especially I think in my region. I look after Middle East and Africa at Schneider, that includes Turkey and Pakistan as well. And we handle a lot of bank guarantees because of the projects we involved in. We give a lot of bank guarantees. And we also, of course, deal in letter of credits when we are importing materials. Now, in the perimeter of Middle East Africa, I just did a quick run, and I have seen that like last year in 2020, we had around, I think, 1,200 we issued bank guarantees. and maybe close to 3,000 amendments. So this is more or less like 1,200, 40, 10 bank guarantees a week. Now, that is still a lot of paperwork for all our all our entities. And let me say something. Last year in March 2020, when we started this, we were using some banking partners platforms, but we were not able to issue any of these bank guarantees via Swift network straight through from our system. We only had this ability with one of our banking partners in UAE. That was okay, but not sufficient. Now, we were lucky because our banking partners stepped up, and now I think we issue our bank guarantees through our system automatically, connecting via Swift, no paperwork. If we need to do amendments, also through that system. Now, this really proved to be super efficient for us. But we worked on this all year now in Saudi Arabia, UAE, and Egypt. We can issue bank guarantees, and that covers maybe 85% of all the bank guarantees we have worked on last year. So, which was a great achievement. I am pushing our banking partners to prioritize, let's say, our region, because the world is not about MENA. Everybody has certain priorities. They have an implementation plan. So hopefully, as we go along, I look after, we will be able to do everything digitally. Now, I would like to get on board our letter of credits to our system next, but I think that's going to be more work. So let's see. But digitalization for us last year, I remember we were talking about a lot of ahead of the curve technologies, maybe we can discuss later, like blockchain, or what kind of different tools, what we can do to trace and also make it more accessible and faster. However, we ended up being very basic. So what I'm talking about is not rocket science. So yes, we just did Swift connection, but it really changed our lives a lot. I think it's 30-40% faster, especially in a year like last year. We are in a better situation right now in Dubai. Things are more open, but it has proven really hard, especially during springtime.
Good to hear that you made so much progress with something very basic, as you said, no big technology, but so very promising developments. Now, let me turn to Yusuf and Samar for the bank perspective. Yusuf, so you work at Citibank. What big trends do you see?
Thank you very much, Emmanuelle, and good morning to everyone. Look, I think as Asli mentioned clearly, the automation or digitization of trade flows has really become center of plate for corporates as well as banks as well, especially in the last 12 months. And if I was to take our example, perhaps in the last 18 months, the kind of focus that we've seen and investment that we've seen in the automation of trade flows has been phenomenal. And this has also been driven by a lot of the demand that has been coming from our clients as well. So if I was to give you some metrics, from a MENA perspective, we were around low 50% automation on the trade services business. By the end of last year, we were at close to 80%. So you can imagine that 30% pickup has been driven by a couple of things. As Asli was mentioning, it's the logistics piece. In lockdowns, how were you going to get couriers moving from point A to point B? Very difficult, if not impossible. So clients wanted solutions for that. The second thing was around, signature and documentation. How can you implement a signature which cannot be on wet ink, basically, right? So acceptance of electronic signatures. Again, a lot of vast, strides have been made in this area. And I think more importantly, if I was to touch on three themes that have driven client and bank behavior. So firstly, it's been clients looking for better and faster turnaround times in terms of digitization to move that agenda. Banks have been looking at a better and a more sound risk and controls environment, which, the reduction of manual touch points provides, hence automation. And thirdly, of course, there's the efficiency agenda, right? So when we look at the big buzzwords today, it's ESG, environmental sustainable governance. So I can't think of a more important initiative than digitization to drive the governance agenda. Thank you.
Thank you very much. Very impressive numbers, from 50% to 80%. That's indeed a big increase. Yeah. Samar, over to you. How is the market moving? What do you see on your side?
Good morning. Thank you for having me again this year at the MENA GTR. And I mean, Yusuf have covered pretty much majority of the points, but I can talk from a, let's say, local regional perspective versus his international approach. See, the world woken up to COVID, or mainly the UAE, around March, April, with the lockdown starting. People could not leave their houses without permission. So the effect of submitting a document to the bank counters to be processed, or for a letter of credit or guarantee to be issued, was a struggle itself. I mean, people also start sending emails through, and with email attachments and restrictions on the email sizes, it wasn't proven that it was easy. You have certain banks in the country, and I'm not just talking specifically about ADCB, who started this, let's say, digitalization and automation journey earlier than expected. So if you take ADCB, for an example, they started around September 2018 by adopting a front-end channel for clients, by starting an internal project, which what we call digital processing hub. So we have looked at it from a holistic point of view. We wanted to give a one-stop shop for our internal team and one-stop shop for our client. So the one-stop shop for a client for documentary trade transactions was basically a customer channel to what Asli was referring to, that each bank has their own front-end channels. And for a large multinational like them, they would like to have a one-stop solution rather than accessing 5 or 6 different platforms. And these banks might not be connected as well directly to the SWIFT database, so they find it a little bit difficult to have a one transaction initiated as a straight-through processing. So each bank adopted a different approach. So for us, for example, what we have done with this digital processing hub, we made it, let's say, enabled. We enabled it for the future of trade finance, which means it's connected to all the systems that the bank uses and the third-party vendors, right? Our processors have a one screen where they receive the transaction from the front-end channel. In the case of Asli, she will only need to get on our platform and submit the transaction through with no paperwork, zero paperwork. It comes to us, it gets processed. Our processing hub is linked to all the third-party providers. And what Asli sees after a few minutes is a copy of the LC or a copy of the guarantee that gets issued. Now, to take it, let's say, one notch ahead, we also thought about integrating our one-stop solution with multinationals or large corporate like Schneider, for example. So instead of them logging on to a bank platform to process transaction, we are working at the moment of the connectivity to our one-stop through an API. So basically, if they have a treasury system or a treasury solution, they do not leave their own environments and access the bank environment. Now, this is the holistic approach. What happened in reality on the ground? Lockdown started, people got stuck, transactions are coming in still. The need of import of certain material skyrocketed. Couriers faces the same difficulties that clients are facing. So everyone has, let's say, woken up to the fact that we must do something and we need to do something. Now, our adoption to our front-end channel last year was around 80% for SMEs and 35 to 40% for corporates. Because normally it's easier for an SME entity. It's most of the time, let's say, a single operated person or 2 people. So the decision-making or the time that it takes to initiate a transaction is much, let's say, quicker and more simpler than a large corporate or a large organization. So this 30 to 40% found themselves stuck. Some people are stuck abroad, some people are stuck at home, some people are in different time zones as well. So the adoption of that platform skyrocketed. So at the year end, if I look at the portfolio of the bank of the documentary trade transactions, combined together, we have 70% of the trade transactions processed by ADCB were done via customer channel. And it proven that to be more efficient. It reduced error. It was timely. We offered the channel free of charge for the clients, so they saved on the fact that they need to pay for courier to courier to the documents to the bank because they could not themselves go there. So the client experience and the journey improved significantly. And it made the bank realize at the same time that we need to invest more and more into these solutions. We need to be more, let's say, agile and adapting to client needs versus to holistic ideas and holistic point of views. So it has enabled and it has fast-tracked what we are doing by at least 2 years.
Wow, by at least 2 years, that's quite impressive indeed. So big acceleration of digitalization, being more agile. Now, let me turn to you, Huny. Can you share with us the Swift perspective on what's happening?
Thanks, Emmanuelle, and hello, everyone. Good to be with you again this year. It was very interesting listening to Asli first and then Yusuf and Samer, perspectives which are fighting towards a common goal in a very common situation. But in terms of approach and outcomes, it's pretty similar. I completely agree with Samer that many banks and many corporates, or as the industry as a whole, I think we have achieved years worth of digitization progress in the last 12 months. I think there's no denying that. But for us at Swift, I think the fact remains that our key stakeholders are banks and corporates. So, and corporates are the key stakeholders for banks. So a lot of the innovation, a lot of the progress we made on digitization is actually driven by the corporate processes and their needs. Take, for example, what Asli mentioned, a low document-oriented process like issuance of guarantees or advising of guarantees is a much easier process to digitize compared to, say, a presentation of an export LC, which inherently will have more documents involved. So no matter how much digitization and innovation we do, we still struggle to completely eliminate document out of that. But in the times of pandemic, I think about exactly 12 months ago, we were having this discussion about, the couriers have stopped moving. People cannot get hold of documents. There's nobody in the bank in many cities, in many ports. There is nobody at the port. So how do you still make money move? How do you still make, trade move? And there was no time to go for any fancy solutions. Asli mentioned it already, that all fancy solutions look good in the long run, but when you need to solve the problem right away, then you look at the low-hanging fruits. So I think the simple approach was there is enough technology available between the banking community and the corporate community, those who are enabled, that can use existing infrastructure and move their documents digitally or eliminate their documents by dealing digitally across banks and corporates. So that's what happened. Back in April, we actually launched a service which we had since 2008, but we relaunched it with to create more awareness that banks and corporates can actually fully digitally exchange their documents under LC or guarantee across the network using our existing products and services without having to invest huge amounts of money or technology manpower into developing a solution. And it was pretty healthy to see a large number of banks take it up immediately. We actually made it free of cost for a year so that there is no cost angle to adoption of technology. So same thing happened with us. I think we achieved a lot more digitization in the last 12 months than we had done in the prior 24 or 36 months, whether it was banks or corporates. And the good thing is, it has given wings to discussions which were fledgling in years before that, whether it was discussions with governments, ports, ministries, who have all woken up to the realization that there is a lot more to be done on the digitization side. They need to open up their process to be more digital, and they need to rely less on paper, which will enable future growth. So what we have achieved is more, immediate urgency-based progress, but then the mindset change or acceptance of digital in the world of trade finance across the ecosystem, I think that is a real big achievement which will help us in the years to come.
Thank you very much, Huny. And let me now turn to Sumit. You launched TradeAssets 3 years ago at GTR MENA. So where do you stand now in terms of deployment and adoption?
Yes, thanks, Emmanuelle, and morning to everyone. I hear having been on the banking side. I kind of hear the progress, and it's very encouraging when I listen to Asli, to Huny, to Yusuf and Samir, and then I can say that from the perspective of a trade tech company which is now providing a solution to the industry. We see I see a mirror view of the progress that I think I'm hearing from colleagues within the banking space. So as a trade tech company, there are many different solution providers who are working on digitalizing many different aspects of trade finance. So what we are doing is acting as an e-marketplace for banks. And we've created in the last couple of years, mainly since we went live, is a digital ecosystem. We are now we have 60 banks from 15 countries as part of our ecosystem. And what we are doing is essentially creating efficiency in the first stage of trade finance, which is price discovery and communication. So just to go quickly into what we really saw during the pandemic, and I think it's a reflection again of what the industry as such is doing and it's feeling. We saw a very important trend, which is a greater willingness within the banking industry to go digital, go paperless, and adopt solutions such as ours. So that's a very important point, willingness at an institutional level. Without this, I think, institutional push for change, whatever is driving it, I think no digitization or digitalization initiative can succeed. So just to evidence this, in the middle of the pandemic last year, we conducted a survey of various stakeholders, including, I think, and mostly, I think, comprising of banks, so existing clients and prospective clients of TradeAssets. And one of the questions we asked was, has the lockdown situation changed the way you view online solutions? The answer was actually, to me, having been on the other side, quite interesting. 70% of the respondents said that they believe more in such solutions because of the pandemic. And I think we would have received probably a very different response even 3 years ago. So this is a paradigm shift in thinking, and I call it a significant development. And I think we can all say that it's a very good start.
Thank you very much, Samir. No, indeed, we heard very big acceleration of digitalization because of the current pandemic, no doubt about that. We also heard from Huny, though, that it's easier to automate a bank guarantee than a letter of credit. So we're not there yet, in spite of the good progress that has been made. And I would like to ask you all, what do you see as the key impediments to digitalization of trade and trade finance, and what more needs to be done to make it happen? We have also received a number of questions. So what I'll do, I'll give you an opportunity to answer this question about the key impediments, and then I will take a few questions that we've received from the audience. Yusuf, Samir, do you want to give your bank perspective on this issue of the key impediments for digitalization, full digitalization, I would say, of trade and trade finance?
Sure. So thank you again, Emmanuelle. I think that, when we look at, I don't want to use the word impediments, but rather I'll use, the other word, which is enablers. So when I look at, what are the key enablers, certainly those markets have done increasingly well where the regulator has played a very, very proactive role in pushing the digitization agenda. And certainly the market we're in at the moment, the UAE, the regulator has been at the forefront of helping create that innovation and helping to foster those automated solutions through the growth of fintechs, for example, by allowing fintechs to nurture and to grow. Similarly, when we look at other markets like Egypt, Turkey, again, in Turkey, the state has mandated the use of electronic instruments, so be it guarantees, be it related to customs, and a similar effort is underway in Pakistan at the moment. And what is driving this? It's being driven by the regulator looking for greater transparency, right? It's the regulator looking to see how can efficiencies be created to afford better more increased trade between counterparties, right? And how to make that trade more seamless especially for the local corporates, but also people who are looking to invest into that country from the outside as well. So as a result of that, there has been a greater uptake in technologies like AI that Sumit and Samer were mentioning, like technologies like OCR, optical character recognition, where you have manually written documents which can then be digitized and converted, right? That has huge sort of implications in terms of not just addressing the control and the risk environment, but at the same time allowing for much greater processing at much faster speeds as well. So I would say that those markets where the regulators are playing that enabling role are going to be far more faster in the uptake of digitization.
Thank you. So a key role to play for regulators. And this is actually linked to one of the questions that we received, which is, was it easy for companies to deal with government regulations, customs clearance with electronic documents, especially for documents that usually need legalization? Who wants to take that question? Do you want to add something to it, Yusuf?
So, look, again, I think it's pretty much what I have said already, right? In terms of when we look at, corporates moving away from paper-based to more sort of automation, more towards sort of digital. A lot of that the bulk of that volume will only get reduced through a much more greater focused approach by the regulator, because that behavioral shift will we're all human beings. We need something that allows us to have that behavioral shift, right? And I think that when corporates and financial institutions see that, look, there may be significant costs if the adoption of technology and digitization is not there, I think it will force the hand as well in most cases.
Yeah, and if I could add to that, Emmanuelle,
yes, please.
One of the important aspects to keep in mind here is that these are risk management instruments we're talking about, whether you're talking about an LC or a guarantee. There is a massive angle of risk which a corporate sees and would not move away from the existing process unless a new process is equally sound from a risk perspective and provides all the assurances that would have been applicable in other scenarios. For that to happen, there has to be legal infrastructure to support the newer versions of those instruments or new technologies. And the regulations have to support any change in the behavior from the corporate side, because eventually it's a matter of risk for a corporate. If you give someone a digital LC, which is deemed to be not as secure as a paper-based LC, I don't see many people moving. So regulations play a very important role. And during the course of this discussion, I think we'll spend more time on that. But it's an absolutely valid question. In our example that I gave earlier, where SWIFT went around and said, why don't you use SWIFT infrastructure to transmit documents between banks and corporates? Some of the markets came back and said, well, we would love to do it, and the corporates are also ready to do it, but the port still needs original documents to release the container. So even if it is, goods are getting spoiled, they will not move unless the courier has actually landed. So those things remain important. And there is uneven level of acceptance and development on that side.
Yeah, no, clear for regulators. And there's actually another question that is related to this point, which reads, how big is the gap between the ambitious government digital transformation programs in the MENA region, wider than just trade, of course, and the perception that globally, particularly when compared to markets like Singapore and Hong Kong, MENA remains something of a digital laggard? Who wants to take that one?
So, okay, I was going to cover the Singapore point, but it's MENA is not so much of a laggard actually. So whenever we spend a day debating digital laws, regulations, you'll end up coming to a situation where you say, okay, everybody needs to have some harmonization in the legal system when it comes to digitization of trade, because it's an ecosystem. It is not just a bank. Bank is a facilitator, one of the facilitators of a large supply chain, and cannot control all the moving pieces. So it is based on legal harmonization that we can achieve more efficiency out of the whole chain. And when you start looking at that, more you realize that, okay, you cannot have various countries having their own laws which do not match laws in other jurisdictions. If an EBL has been issued in one market, it has to be acceptable in the other market. There has to be some common standard even for a legal framework. And that common standard for legal framework is already developed by United Nations. It's called UNCITRAL Model Law for Digital Transactions. And guess which was one of the first countries in the world in the last 5 years to enable it? It was Bahrain in MENA, which is the most recent one. It is Singapore in 2021. So it's not that MENA is laggards, and I've been part of those conversations with relevant stakeholders in UAE, and Yusuf mentioned it just now, that we are not really behind on that. In fact, in the next few years, I would expect MENA to be leading, one of the leading regions in adoption of these laws. So it's important. It will take time. It's not going to be an overnight success. But like I mentioned earlier, the energy behind the initiatives now and an acceptance of the importance and the speed at which it needs to be executed, it's much higher now than ever in any point in history, I think.
Thank you very much, Amy. And yes, indeed, Bahrain was the first one to adopt the UNCITRAL MENA. Now, anyone wants to jump in and add to what Huny just said? We have many questions coming in. I have plenty to ask you if you don't want to jump in.
Yeah, maybe I can just add.
Sumit, okay.
Yeah, sorry. I just want to add to the point of regulation and how it kind of interfaces with what we're trying to do in digitalization. Digitalization ultimately is about innovation, and regulation is a lot about standardization. So I've always, in my many years in banking, always grappled with this conflict between standardization versus innovation. So on the one hand, the zero risk tolerance and the zero tolerance towards errors when it comes to regulation and rules and compliance is putting people in a box. And at the same time, when we talk about efficiency and solutions, we are asking people to think out of the box. So the point is, how do both of these two concepts coexist? So I think the drivers have to really come, one, from the participants in trade finance, in the whole value chain. And it also has to come from the top, from shareholders. So shareholders, one hand, to demand greater returns on their capital from efficiency and process improvements. And the other hand, clients have to demand the efficiency and the benefits that they get from digitalization, which is a great, very important component of innovation. And that is, I think, important. We've seen what TradeAssets trying to do is trying to create a 3-click kind of a deal-making process, like a Reuters or a Bloomberg, and transferring that, which as a solution which has existed in the financial markets for many years, into the trade finance industry. And I think here we see, if we talk about an impediment, it's not so much regulation, it's so much resources. It's really about reprioritization. And that view from the top, that digital solutions is really our insurance for the future. And again, I have heard the word future-proofing many times, but in reality, I think digitalization is actually going to future-proof the future of the industry. And that's something that message has to come through.
Thank you. I think Samuel wanted to jump in.
Just one quick point I just want to make very quickly was that it's not the advanced markets in MENA or Singapore for that matter. But when we look at some of the markets that are truly developed, like Pakistan, for example, right, or Egypt. In Pakistan, the central bank is allowing for bill of exchange, bills of lading to be all automated. Right, and this is speaking very much to the heart of exactly what Sumit and Huny were saying earlier around the facilitation of those flows and ensuring that better and faster turnaround times. Sorry, Samir.
Thank you. And you, Samir, and if you take the floor, I have one question for you, because you mentioned SMEs when you first spoke, and we have a question on that. Can SMEs afford to transform their businesses' transactions to a fully digitized environment, or do they need to wait for more efficient and faster digital economy in the new normal? So I don't know whether you want to tackle that as well in your answer.
So just before I use my thought on the regulatory and the obstacles and all that when it comes to trade finance, I would like to point from a different angle. So yes, there is a bureaucracy when it comes to the government. There is a bureaucracy when it comes to the port authorities. They want to do, but if they take their sweet time, as we say it in conversations. But today, I mean, trade finance products must allow multiple parties to trade easily, like securely and legally across the borders. So for this to happen, it requires a common operation and legal standards, which is not there today. So by introducing new and technologically diverse platforms and shifting from paper-based contracts and other documentation to its digital equivalents, the ecosystem creates new challenges with regards to the standards. And this is the difficulty that a lot of bank faces today. If you look at market research, 80% of banks who got surveyed regarding this aspect considers the lack of standards as a significant barrier to the digitisation of trade finance. So today, I am aware that ICC and the World Trade Organization are coming in and doing some, let's say, common ground work when it comes to these type of legalities. So for the banks to be able to, grab on those and accelerate, these are the minimum requirement to find a common standard across all the countries, because in one trade finance transaction, you can have 20 plus counterparties involved and a minimum of 2 countries or a minimum of 2 geographies. So for us to come and say, yes, we want to trade on an ecosystem or on a platform. Today, there are many platforms, many ecosystems. Corporates are facing the difficulties in adopting them for 2 reasons. They want to say, okay, I want a one-stop solution, right? So I'm going to wait until this ecosystem merges all together or it's mature enough, and then I'm going to go in, because not every time I want to participate something, I want to pay money. Right? You have the other angle as well. Some corporates are not willing to spend, and it's a costly technology. I mean, today banks are rolling out cloud environments. So we're rolling out cloud environments. We're doing proof of concepts. We're participating in pilots. Okay, but most of those ecosystems are limited at the moment to that. And this is basically because of the lack of the standards and the lack of interoperability between these platforms and these ecosystems. So these also are pain points that are for banks and for the corporates at the same time. Now, back to the question to the SME, the UAE, and I can talk from a UAE perspective, right? So the UAE, whether Dubai, Abu Dhabi, have been pushing the financial system to support the SME sector, not just because of COVID, pre-COVID days. Okay, so there is a significant push to get those, let's say, vital sector. It is a vital sector, the SME for any economy. Okay, the access to financing, the access to credit, the proper controls, the transparency, and the support that they need. Right. So there has been discussions in terms of a national trade platform. There has been discussions regarding the UAE Trade Connect. There have been discussions regarding different initiatives. One of them is led by the FinTech Office of the Central Bank of the UAE. So all of them are aware of this. I mean, Abu Dhabi has announced also Ghadan 21, which is an initiative that mainly targeting and supporting the SME sector, right? So at the moment, all of them are working towards that. There are many, we can say, ideas, and many of these ideas have materialized into, let's say, a prototype or a start for a launch of a platform. Some of them are marketplace, some of them are risk controls, some of them in between both. Okay, as a bank, our view is we are willing to work with everyone and we will support them, providing that they are demand. And if the demand is there, then it justifies the cost spent and the need. So we are very mindful of the SME sector and we would like to support them as much as we can. And we think that they are, let's say, the throttle for any digitization push when it comes to the banking market because they are the mass.
Thank you very much, Samer. We only have 5 minutes left, and I have received many questions, so we won't be able to go through all of them, unfortunately. But let me turn to Asli for a couple of questions. But maybe before I ask the question, there was a poll that we wanted to launch, so you could answer the poll while Asli answers the questions. And so the poll reads, I think it would probably appear on the screen. Yes, on a scale of 1 to 5, how would you rate the feasibility of fully digitalizing trade and trade finance within the next 5 years? And so while you answer the poll, I will ask the questions to Asli, and then we'll come back for a final question, closing statement. So Asli, a couple of questions for you. In your experience, what is the level of consultation when it comes to the digital products offered by your bank, or is it more off the rack rather than bespoke to suit specific client needs? And then a second question, I would like to ask Asli to explain how the guarantee process was automated compared to the traditional method. And if you could answer in 1 minute, 1 minute and a half, that would be great.
Okay,
because we don't
perfect.
have enough time left. Thanks.
Let me do the first one quickly. We use a certain system for our bank guarantees, for example, where when we want to issue the bank guarantee, any company, of course, will need to go through some approval process. So we take care of these guarantees in that system, but before this system was not connected to our bank system. So because we were able to connect our banks through the SWIFT network to our system, once we go through approvals, it's like a document management system. We attach all the documents that are required for the bank. We agree the formats. If there is any change, it goes to the bank. We attach some comments. Any like document management system, but everything goes digitally through the SWIFT network. Now, this is the first question we can talk about later, but I'm sure their banks will also be able to support on this one. The second one, I would like to say both, because sometimes I ask for bespoke products on our site. And yes, most of the time it's off the shelf. And again, I want to touch back to MENA is a very big region. So I don't think, for example, the UAE, Saudi, Bahrain is necessarily, or Qatar is representative of Egypt or Turkey or Pakistan. My experience, Egypt is not digitized at all. And it should be, because it's such a big country, there should be. So it's not always regulation. Regulation is there, but it's supply and demand and disruption. Like we are all in favor of disruption probably here because we talk about this. But when we enter a crowd here in this region, I don't think we have that many disruptors. Everybody wants to keep the things as is because there is this scaredness about, oh, I don't want to break things, which is, I think, hopefully COVID has changed for all of us.
Thank you. Thank you very much, Asli. And so we see the results of the poll. It's 3.6, I think, 3.7 now, out of, well, on a scale of from 1 to 5. So we're not there yet. People seem to be, well, slightly optimistic. It's more than half. It's over 2.5 that we can fully digitalize. But yeah, we're not at 5 yet. So still some way to go. So as a closer, what I would like to ask you all is, what is your call for action if you truly want to digitalize trade and trade finance in the next 5 years? What do we need to do? What do we need to do to make it a reality? And 30 seconds each. Sorry, we won't have more time than that. Asli?
I would like to say commitment from me as a client, commitment from our service providers, and of course, regulators.
Right, Sumit?
I think it's a sense of urgency, and the sense of urgency that's intrinsic to the adopters of digitalization. So I think our biggest success stories within our framework has been from the MENA region, and what we want to do is take these success stories and aggressively tell these stories to the rest of the global ecosystem, and make sure that the message percolates. And that's my formula for the success.
Huny?
Yes, from our perspective, we continue to focus on standardization of the processes and creating more open source solution so that we can be, continue to play a central role in enabling trade across all the 11,000 connected entities we have across banking and corporates. So we have a very heavy weight of responsibility, and we continue to focus on that.
Right, Yusuf?
Yeah, standardization and investment in technology.
Standardization as well. Samer?
So the key for the success is collaboration among all the parties involved, and the sense of moving from the proof of concept to go live commercially is the driver that's going to get everyone what they want within the next 3 to 5 years.
Great. Thank you very much to all of you for a very interesting and stimulating discussion on this topic. And let's make it happen and hope that in 5 years' time, we'll have fully digitalized trade and trade finance. Thank you very much to you all.
Thank you.
Bye.
Thank you.